Good morning all and welcome to this morning's video. So I am a little later than normal this morning, and that is because we had a end of the month webinar within the private community that I'm a member of, the Falcon community. If you're watching on YouTube or you're watching on TradingView, then just to say that there is a link on my YouTube profile and in the description of this video and my other YouTube videos if you wish to join or learn more about that community. But it was a lot of fun. We had a webinar last night. We had a speed networking event at the end, and we were paired up with people that randomly paired up with people from the community, and that was a lot of fun, and I enjoyed talking to a lot of the members. So if you were one of those people, it was a pleasure to speak with you last night, and thank you to all of the people that mentioned my videos and mentioned that they watch them regularly, that they enjoy them, and that gives me a lot of inspiration and inspires me to make more of them. So without further ado, let's break these pairs down for you and for the people outside and within the community that watch these. I hope that I can continue to provide you with a ton of value. So my favorite of the bunch today is Aussie yen. Look where we are, guys and girls, on the higher time frames. We are at an all-time high. Now, what do we know about all-time highs? Well, as well as people getting caught the wrong side of the market, once it breaks above, if it breaks above, as I say, nothing happens all of the time and nothing happens none of the time. This is where people get itchy fingers, okay? This is where people get impatient. People wait patiently all the way up to here, okay? Maybe not all the way from down here, but they're waiting patiently. They're looking at this going, this is it. This is the area of value. As soon as it gets there, I'm going to sell. Well, the market doesn't work like that usually. So I've said these are like major train stations, and at major train stations, these standout ones, lots of people tend to get off or on and off the train, okay, which means that it can hang about for longer. So I'm actually anticipating that this, even though we're right at the area, I'm actually anticipating this to be the least likely of the trades to shape up this morning, just because I know that price can hang around in this area, okay. But regardless, we have this all-time high here, and one of the clues, here's a prime example of people getting in too early. We did have this high here. I'm not surprised that we reacted from here, because we had a very sharp move up and a huge sell-off, the biggest sell-off in Aussie yen's history. Okay, so it doesn't need to always get to this area straight away, especially if there's a sharp move up followed by the most aggressive sell-off of all time. Okay, so we tap into that, but what we did do is we near missed to the area. Okay, and when we near miss to an area, what normally happens is we get a corrective sell-off. Okay, so we get a sell-off which was more corrective than the move up which preceded it. Okay, it took more time to come down than it did to go up. Basic mechanics, and then we get a more impulsive move up to the high which we near missed to. Okay, so this is literally textbook stuff. So we take out this high, the near miss to this high here. Okay, we completely smash through it without respecting it at all. Well, it doesn't surprise me, because one, it's not an all-time high, and this was not as aggressive as this sell-off. Okay, and I mean, we could have reacted from here, because we did actually have a near miss to here, so we could have seen a move down, potentially maybe down to here or down to these areas, and then come back up for more of an expanding pattern like that. But we didn't do that. We've just completely smashed through this high. So if we just zoom down, excuse me, there we go. You can see this is exactly what I was anticipating. What have we done? We've wicked to the area, okay? So this is a prime example of people getting in too early, potentially. We don't know. These things can change. But when we wick to an area, so this hasn't closed yet, but we've wicked the area, not through it. And if we are going to wick through an area before moving to the downside, then you best believe it's going to be all-time highs. Okay, that's the most likely area where that's going to happen. Daily chart, what have we done? We've wicked to the area, and we've wicked to it in the form of a bullish wick. So a bullish wick, so a green wick. Okay, when we have the green candle there, these are more likely to be filled than the bearish ones. What have we got on the 4-hour chart? We've got a bearish wick. Okay, but how have we moved down? Look how
correctively, we've moved down. On the 1 hour chart, we've wicked to that area on the 1 hour chart. Look how we've moved down. We move in the form of an impulse like that, a smaller correction, and like that? No, we didn't. We got one bearish candle and then this massive sideways correction. So as soon as I saw this, okay, I was already under the impression that we'd likely form something like what we're seeing now, push back up, and then we get more of that expanding pattern, and this becomes the middle section within the expanding pattern. You can even see that 1, 2, 3 there. We tap into this area, which this near miss 2. Okay, this low breaks above below this one, but doesn't tap into this area here, which this low near miss 2. We could have gone all the way down to there. We wick there. We may come back down. You see, we're coming back down now. We may tap into the base of the structure, the base of all of this correction, and then push to the upside. But regardless, what I'm looking for in this instance is I'm looking for a break above. So I'm looking for a break above the area of value. Okay, break above, specifically a break above a 1 hour impulse back down below the area of value, and then I'm looking for either a 3-touch 5-minute continuation or a 2-touch 5-minute continuation with a 3-touch structural approach, and then I would look for a reduced risk entry on the break of it like this, or I would look for the same thing but on the 15-minute chart or above. I don't think we'd get a 1 hour flag up there so much, but we never know. But if we got anything larger than that, then I would look for the same thing, but while simultaneously looking for the risk entry within the structure. And then if we got the reduced risk entry, I would be able to manage it down to here. So the base of all of this structure for something in the region of 3.5%, assuming that we did actually respond from this low. Okay, if we were going to push up to break the highs, and then my target in this instance would actually be down here for something in the region of 7.5%. And then once again, I would use the mechanical management tool, the Fibonacci tool, to measure from range to range. And the reason I would target here, I would set a take profit at the 90% area, and I would trail my stop loss accordingly. Okay, the reason is not necessarily that I'm anticipating price to stop in this area and not continue. It's more to do with the fact that we have the base of a piece of structure here. You can see the near misses to this low. This is the base of all of this structure. Okay, and that would be, if we just zoom out, remember where we are. One of the important things to do is once you've done top-down analysis is zoom back down to the downside. Okay, so it's not a daily low as such, but we can see that bearish candle there on the daily chart. But there's a big consolidation on the 4-hour chart. And I think that even if we were to continue in the forecasted direction, I think there would be a fair bit of profit taking, which could resemble the same sort of depth as this. Okay, so I'm not really interested in sitting through something this large, which if you just look at the bottom of the screen, the days, that could take a couple of days. And also it's more to do with the other thing it's more to do with is that if price does respond from that area, if we get a consolidation, even if we do keep going in the forecasted direction, price can retrace often 50% of the move before continuing, which means that I'd be sat through a pullback of probably about 4%. Okay, so I'm factoring in things like that as well. So that is Aussie yen. Definitely my favorite of the bunch in terms of positioning and what the sequence would likely look like if we got something like this. Okay, we'd be positioned very, very well for the sell. Okay, but doesn't necessarily mean that I think this is likely to shape up by the end of the day. But that's Aussie yen. That's what I'm going to be looking for. Next up is Kiwi CAD. Now you can see that starting to sell off. This is probably looking even less likely, but it was looking likely. I shall explain the thought process regardless. So on the higher time frame, on the daily, same thing again as that you may remember from Aussie yen. If we zoom out, it's like a smaller version of Aussie yen. You can see the same structure. Okay. So one of the reasons this is slightly lower down is simply just because it's not at an all-time high, but really this is a beautiful structure here. We have the sharp move, okay, sharp sell-off. What happens? We near miss to that area. And what happens when we near miss to it? You usually get these corrective middle sections. So we get the 1, 2, 3. We tap into that low, which doesn't surprise me, given that this correction was the one that broke out of all of this. Okay, so there must have been liquidity there for enough volume to have been exchanged for price to break out of all of this. So we then tap into that. We get a little scoop double bottom, which sometimes happens. Then we move to the upside, break above here, double wicks. Look at this, wick above. So we wicked through and not necessarily to. In this instance, price came back up again. Okay, most likely to tap into this exchange of liquidity here, which caused price to break through this brick wall low. And then we completely capitulate to the downside. We get the it's not an evening star as such, but we get the evening star type formation where we get a bullish candle, the stall, and then the close, which closes below the middle candle, as it were. So we've got that evening star formation. Then we completely follow through. And what I like about this is we're trading back below all of these highs, back below this one, and we could be capitalizing on a move to the downside, potentially down to these areas or down to where price last stalled, or even here. Okay, so if we just zoom down, you can see there's we can see the consolidation now. Okay, so we've got the impulse correction continuation, bit of a corrective break of here. I'm mindful of that. But if we zoom down, you can see the similar thing happening on a lower degree. So if we just zoom into the 1 hour and being mindful, excuse me, being mindful of the time. So we have this structure here. We have this, okay, which taps into this high here. Okay, yes, we wick to it, but we're on the lower time frames. Remember, on the lower time frames, we're less likely to break above. Okay, more likely to just tap into it. We then get, excuse me, I'm going to have a drink of water before this gets any worse. So then we get a bit of a steeper structure there. You can see the 1, 2, 3 touches. Okay, it doesn't necessarily break into anything as such, and that is a factor in my thinking. Okay, we break to the downside, we come back up. Now, what are we doing here? What are we near missing to? We're near missing to something. We have this, we tap into the area, but price doesn't find enough liquidity to send it to the downside. Okay, we then near miss to here. Then we have this wick, which taps into this, okay, but it near misses to this high. And the reason I'm not interested in moves down here at the minute is because this is just a volatility wick, okay, for the reasons that if you look at this on all time frames, wick, bullish wick, bullish wick, bearish wick, but it's still a wick. When it's a wick on literally every time frame, 15-minute, I think it's a wick on the 5-minute. It's even a wick on the 5-minute chart. So that is not indicative, in my opinion and experience, of the sentiment of the market. So with that in mind, if it's not indicative of the sentiment of the market, and we can see that from the line chart, okay, because it doesn't appear, this to me is just a series of near misses potentially to here, because this was this high is above this previous low, so it becomes less relevant. But also, this is the one that tapped into here, okay, and this was then the footprint that price left after tapping into here and breaking to the downside. So that's the one that, in my experience, price is most likely to gravitate back towards. So when I did my forecast, price was about here. Okay, and what I was seeing is I was seeing this as a near miss to this low, and kind of this being the low that breaks below there but doesn't tap into there, and then potentially a reversal from there to give us more of that expanding pattern. Okay, but you can see that what's price done is actually consolidated below this low and not found any liquidity there. So we may, if we are going to push to the upside to the area of value, we may now be pushing down to here to then push up to there. I'm not necessarily seeing that now because this is a more impulsive move down than this corrective move up. Okay, so we may be forming a separate structure, but I won't be interested in any trades at the low at the minute, because if we just use the price range tool, we've only got a few, like 12 pips to the bottom of the structure. So given that I have a minimum of a 10 pip stop loss, I wouldn't be able to manage the trade to the low of the structure. Okay, so I would be poorly positioned. So I'm just going to keep this on watch. I don't think it's likely, but regardless, I'm going to keep it on watch. And what I'm going to be looking for is, we do have some news coming out of the European Union at 10 a.m. I think, which actually this is a different pair. What am I talking about? I was thinking I was on one of the euro pairs for some reason, so scrap what I just said. But what I'll be looking for regardless is a tap into this area here, a push down and a flag, and I won't be looking for a 5-minute just because we've got an inflection point sat above. So when we've got inflection points or sharp moves sat just above the area of value, I always wait for a push down and a 15-minute flag, and then I'll be looking for either an entry on the break or within it. And I'll be able to manage it down to the low of the structure. I will be better positioned for something in the region of 3.5 to 4%. And then I would be targeting this low down here, because if we measure the whole impulse, okay, and we assume that the continuation leg is of a similar length, that would take us down to this area, which just so happens to be the base of all of this consolidation. So, and that would give us something in the region of 14% to work with. And then once again, I would use the Fibonacci tool, measure from range to range, set a take profit there, and also trail my stop loss at the same time. So that is Kiwi CAD. Last up, and I've got not much time to get through this, but pound Kiwi. This to me looks the most likely to shape up by the end of the day. So this is, if we just analyze this very quickly. So we do have an exchange of liquidity here, okay, which caused price to smash through all of these lows. So we get a big exchange of liquidity. We sell off there. We have so one of the reasons this is lower on the list is because this is only visible on the 4-hour chart. But we have the 1, 2, 3 that near miss to that area. Then we break above, move to the downside. Okay, and then we get this consolidation here. So we get this. What is price near missing to? So price reacted from this area, but notice it wicked to the area, not through it. We come down and come back up. Why is price coming back up? Likely because it didn't find enough liquidity here to send it to the downside. So it's probably coming up to this area, okay, which you can see here. This area wicked to this area and didn't break through it. So we're likely finding liquidity here. I'm not so concerned about this high here, because if we just zoom out on the daily chart, this isn't really visible on the daily chart, whereas these highs are. Okay, so the higher time frame liquidity points hold more weight. So what I'm going to be looking for here, this looks like your sellers being trapped into the market too early, and that's exactly what I was anticipating, because we have this high sat above. So what I'm going to be looking for in this instance, and I am mindful of the size of this correction relative to the move down which preceded it, but I'm also aware that this is pound Kiwi, and pound Kiwi gives us these massive sell-offs, and then it goes sideways, tends to go sideways for a long period of time. Okay, so what I'm going to be looking for in this instance is, you can see we have the middle section again, all 3 pairs. Do you notice the psychology of the markets? With the high there, we come up, we near miss to it, corrective middle section, and then we have that impulse correction continuation. In this instance, price tries to sell off from the where it's already kind of responded to, and it doesn't find enough liquidity. But we got the same psychology over and over again. And I've spoken to many people that say, yeah, but how do you know these patterns, these psychological patterns might not always repeat themselves? Well, that's like saying greed, hate, and love, they might not always exist. Well, yeah, maybe not in a world of robots and cyborgs, but we're human beings. We have the same emotions that we had since the beginning of time. Okay, so what I'm looking for in this instance is tap into the area of value. You can see we've had another near miss by the looks of it. Price tries to sell off, people FOMO into the position, and it's coming back up. So what I'm looking for is a tap into the area of value, a push back down below this area of interest. Then I'll be well positioned on the higher time frames, back below there. Okay, I'll be well positioned on the lower time frames. The sequence would likely be good, presuming it looked something like this, and then I will be able to manage it down to that low there for something in the region of 5.5%, and my target would be down there, where once again I would be looking for. I would be using the mechanical management tool. In this instance, I would be happy with a 5-minute entry, simply because we are, I'm not concerned about this high sat above for the reasons previously given, and then that would be my target there. Take profit set there, trail my stop loss accordingly, and then that's what I'm going to be looking for from these pairs. I hope you've enjoyed this video, folks. I've rambled on a bit too long, and it's nearly run out of time, but I hope you've enjoyed it. As I said, thank you to all the people I spoke to last night. It was a pleasure to speak to you all. I hope you enjoyed this video and have a great rest of your day. I'll speak to you again soon.